I mean, it's not that I'm just watching this policy. I'm going to Washington. I'm banging down the doors where I can. I'm taking meetings with every senator or congressman or woman that'll listen. I'm just one of those private investors that are going to the Hill and saying, look, here's why this has merit.
Hey guys, welcome back to Library of Wealth. Today we have millionaire investor Kevin O'Leary on the future of Bitcoin and the volatility that cryptocurrencies are experiencing in the market today. O'Leary says that we are currently lingering in the Bitcoin range of 2,300, but big miners are still being granted up to 7,000 in coin, so economics are still around with plenty of money. Installing regulations, however, will be an immense opportunity for Bitcoin because institutions can finally allocate to sovereign wealth. Pension institutions will put up to 50 basis points into Bitcoin, which will finally break it out of the slump. Many big companies want to buy Bitcoin, but can't because there is no policy or compliance infrastructure. Getting regulations on Bitcoin will be a win for everyone because huge amounts of capital will pour into the space. Let's check out this interview with Kevin O'Leary as he talks about the improvements that need to be made within the crypto ecosystem. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We're kind of stuck in a range on Bitcoin right now with 23,000. Big miners are making coin, getting awarded coin around 7,000. So the economics are still there to put money in the ground. But the big opportunity, the mega opportunity for Bitcoin, and why I stay long and why I continue to allocate to Bitcoin is when we get policy and institutions can allocate to it, sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half 1%, up to 1% into Bitcoin. And that's where you're going to break out of this range. How high? Nobody knows because the demand is almost insatiable. Most large institutions want a position in crypto and they want the granddaddy crypto. They want Bitcoin. They can't buy it yet. So for all of the excitement when we talk about institutional buyers, I'm also in the indexing business. I service the institutions and the sovereign funds with indexing. And they all tell me they want to index for Bitcoin, but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto. Huge amount of capital come flowing in. When that happens, we don't know. The first indication would be allowing an ETF with the underlying asset being mark-to-market Bitcoin itself, like they've got up in Canada. That thing had billions in it as soon as it got announced. We don't have that yet. It just got turned down again. And that's why there's a war going on between the SEC and other regulators, a turf war as it might be, on who's going to regulate Bitcoin. We don't have to go crazy. We don't have to get 100 or 10,000 coins. If we could just get stable coin policy, Bitcoin policy, maybe Ethereum, maybe Polygon, maybe Solana, that would be enough. That would be huge. That's a large amount of market cap just right now in crypto. But when it comes to Bitcoin, the floodgates themselves is compliance infrastructure at the sovereign fund level, the Norway fund, the Saudis, the United Arab Emirates, our own states, pension plans. If we were calling that asset, whatever we're going to call it, a commodity or a security, and we got that done, I don't care which direction it goes, why wouldn't you be allocating to any portfolio a portion to Bitcoin, just like you would for real estate, just like you would for stocks, just like you would for bonds? That would really change the dynamic on Bitcoin. And when that happens, you have to make a decision. Do you get ahead of that curve, not knowing when that actually is going to occur? Or do you wait until it occurs? Because it'll be, in terms of price appreciation, I believe it'll be dramatic. It'll be dramatic. You could have a gap up 10, 15, 20, 25% overnight because you've opened up trillions of dollars worth of access to a new asset class. That doesn't happen too often. And I think all of the productivity and all of the people that are working on the blockchain and all the projects out there, and I always remind people, Bitcoin is not a coin, it's software. There's lots of really smart guys leaving colleges that are engineering and moving to the United Arab Emirates or the Caribbean islands. They don't stay stateside because they don't have any policy. So all that intellectual capital could come back stateside. There'd be a lot of things happening once we get policy, once we get regulation. And I think you're right. The timing is probably 6, 12 months. But Katie, bar the doors when that happens. It's going to be really wild.
O'Leary says that even the floodgates of Bitcoin are compliance infrastructure at a global fund level. He believes everyone should allocate any portfolio or portion to Bitcoin. When this occurs, massive changes will come to the entire system. O'Leary says you can either be ahead of the curve and risk not knowing what will happen next, or wait until it occurs as price appreciation, which will change everything. This will open up trillions in access to a brand new asset class. O'Leary reminds us that there is an abundance of talented people working on the blockchain and new projects every day, so Bitcoin should be thought of as a software, not a coin.
The theory of the inflection point is somewhere sort of 7 to 15%, and then it accelerates. I don't care what technology you look at. I mean, it goes back to when the adoption occurs and how fast it ramps afterwards. But I'll tell you, there's two things holding us up right now. Let's stay specific on Bitcoin. The wallet infrastructure, whether you go centralized or decentralized, it's just not good. And I'll tell you, I don't mean, excuse my French. And the reason I say that is it doesn't hook up to the existing compliant infrastructure for institutional investors. When they buy Bitcoin, it's very difficult for them to plug it in to their portfolio mandates because all of the other assets, the majority of them, get marked to market at 4:01 in the afternoon, New York time. That's not the case for Bitcoin. It just keeps trading 24/7, as we all know. So there's a disconnect to the way that their own compliance departments say, well, how do I monitor this for 24/7 trading? If you're using leverage, for example, or you're not allowed to own more than 5%, or you're not allowed to own more than 20%. There's all these rules by which institutions have to be compliant. So when I talk to these guys about, and the women who manage these funds, they say, look, I'd love to own some Bitcoin, but there's nowhere to fit it in. I don't have any infrastructure. The wallets aren't secure. You saw the Solana hack again. I mean, we got a lot of work to do as an industry to clean it up, whether you believe in the centralized or decentralized model. I don't care. I use them both myself. But I have to admit, like everybody else in the nascent days, I've been ripped off on a decentralized wallet till I got the joke on security. Now it's hard to do that to me. But you have to go through the learning curve, and a lot of institutions just want to plug and play. So you want that rapid adoption. Let's clean up the wallet system. I don't care, both centralized, decentralized. Let institutions decide what they want to do. You know, we heard the announcement that BlackRock's working with Coinbase. That's not going to really change much because there's not many institutions that are going to use the fees that Coinbase has. They'll probably go to FTX or Binance to do that. But I'm not saying Coinbase won't give an institutional pricing, but it doesn't matter. There's no demand yet. We need to fix the compliance that you plug in, whatever register you've got, whatever wallet you've got, works right into your system. And that's the kind of stuff I'm working on. I mean, I talk to so many banks, so many institutions. It's always the same story. I call up compliance. I want to buy $1 million worth of Bitcoin. They just say, no, Nanette.
O'Leary says that the thesis of the inflection point is about 7 to 15% in any technology. This point goes back to when adoption happens and how quickly the technology ramps up. The Bitcoin wallet infrastructure, centralized or not, is not a very good system. This is because it doesn't connect to any existing compliant infrastructure that institutional investors buying Bitcoin own. This means it's very difficult to join it with their other portfolio mandates. Most assets get marked at a set time, but Bitcoin is constantly being traded, so if there is a disconnect in their compliance department, there's no way to keep track of the trades occurring. O'Leary is currently working on fixing this by making the compliance be able to plug into any registers or wallets into the owner's position. What do you guys think of Kevin O'Leary's opinion on Bitcoin's current wallet infrastructure? Let us know in the comments below. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.